General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. So for the middle of the week, anchor reassessment. Does this okay? Monday low smacked. So this Wednesday high. So was this Wednesday midweek reversal? Took out all those weak lows. All right. Wednesday is the new anchor. Now that Monday low is taken out. Looks like we're gonna finish the week bearish. Shift in framework hit rate. There's really a gap on the CFDs right here. This week was heavily manipulated. Manipulated from a weekly profile perspective. Yeah, it's not really no clean profiles. This was kind of clean with the 3 drives. Yeah, but that's it. daily profiles are off as well. Most of these moves are day before big news drops and take sell off. Case studies, high quality, and a mistake. Mistake was thinking Monday lowest day. Which day? You can't really say it's news. Really pin sell off on news. It's definitely interesting. It was looking like a big day. Time frame bias. It's week 2. It's an inside week. Man. Mm. Week 1 supposed to be the Judas, but this is looking like it's gonna be a whole engineered liquidity week. This high and this low looks. They both are decent. They don't look weak. We can really chop here for tomorrow's CPI. We'll see if that's a big deal. Week 2 monthly cycle. We still at 50% of week 1 range. CPI could get us out this range. This is high. Expansion mitigation signals. Currently, no consolidation, no expansion. Decision quality. It's been high probability. Getting used to seeing when it's too choppy or things is going crazy. Narrative framework accuracy. I'm going to the markets. Experience success or failure. Showing up. Failure would be I still need to back testing for the last ICT Twitter space. It's not really no case studies. Thursday. Today's expansion day. Engage. Medium. We got everything. Anchor point is not confirmed, but we expect a Wednesday. Now that we took out Monday, expansion is playing out. Predicted 10 minutes. All right, so we got what we wanted to buy from, but we got even better. Delete this. That gap is very interesting. Okay, so one side of the day, we left the range, but after we left the range, price did not move. Or price, after we left the range, price went into time distortion. That's it. Hold on 1 second. Okay, H1. Missed the draw. I was thinking we would go up here. We came back to retest December's low. This December's range is a trap. We've been in this thing since the beginning of this year. Numbers, 3 action off December low. I don't trust it. We can go lower. I prefer wick reactions. Oh, 5 time frame key levels. Look like we sitting on this one like a couch. Yes, candle bodies on it and everything. Nah, it don't respect that level. This the next major swing low, and the 200. The 200 might do something, but if we looking like, all right, what's gonna do something? Maybe we just gotta look for sales. This would be rebalance objective. Buy side in that volume imbalance. See. It makes sense to rebalance. Objective would be the feel on daily VI. Keep this here. It's gonna be interesting how we play with this range. So here we knocked out all the weak lows in the book. Okay, like it's just a bunch of new weak opening gaps. That's why it looks like notebook paper. Price did some repair on some core lows we had from the start of the week. Okay. So we got relative equal lows down here, EO down here. This makes sense for like a target. I would pick a daily low. Have to pick this old low. Keep it here. Those are all good sales too. And this is, what low is this? January's low. This target will be January old low. We have relative equal lows below this as well. Okay. December low is the major swing low on this. And it's way higher. This looks super bullish. Super bearish, I would expect. Super low to get hit. Something as well. Yeah. Framework and out. What do we learn about patterns, narratives? Watch for those one-sided days. Fair value gap tells you everything. It's tomorrow's CPI. All right. Just that on that. Y'all have a good day.